Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back, everybody, to another episode of the Reinsurance Podcast, and it's a special guest episode today. We're joined by Frank Perkins, CEO of Inari. Welcome back, Frank.
Yeah, thank you guys for having me, and first of all, congratulations on your recent use.
Oh, thank you. Our Series A funding round is what he's referencing. Another tech founder in the conversation, so we always love to bring tech founders on. So thank you for spending some time tucking into all the things that you guys are doing. We'll talk about stuff we're doing and talk about the future of the industry, I think, which is always fun.
Awesome.
And like us, Frank, you're sort of a industry devotee, so you're no stranger to events like Monte Carlo. We saw you very briefly on the yacht for a sort of 5-minute Reinsurance Podcast episode way back in last September.
Yeah.
But we thought that didn't really do Inari justice, so we wanted to get you back on the show to properly explain, who are you, what do you do, what does Inari do, and so on and so forth, and hopefully in the process unpick some other terms and concepts that fly around in the insurance tech space, so that our listeners get a better understanding of it all.
Cool. Yeah.
So how about we go back to the very beginning? How did you find yourself in the magical world of insurance and technology?
Oh, well, technology, that's probably the easier one, right? So like a lot of us, I think we were born in that very special moment. A lot of us born towards the end of the 70s, early 80s. And you have the first Spectrums, Ataris, and stuff like that. It was a very different world. So you had to do a lot of things by yourself. And as a 4 or 5 year old, I got a hand-me-down of a Atari 800 XL and started that way. And it's just a thing of passion for the rest of your life. So I'm very fortunate to have something that's very ingrained in me. I'm very passionate about. I come from a family of engineers. To continue with that and actually work in that, I think that's an amazing thing. So the technology thing's always been there, and like a lot of others, sort of the stereotype guy, video games, stuff like that. So that's part of the journey. How to get into insurance, like a lot of people, by absolute accident, complete accident. So I was working at that point for the Catalan government doing a technology migration, and on one of these popular job boards, there was a job posting in English. Now, where that's very frequent now in Barcelona, back in 2006, that was very infrequent. And so, like a lot of things that I do, I just signed up for it because it was in a different language. And that was actually at HCC Global, which is now Tokyo Marine HCC.
Yep.
And that was a fantastic experience. We had a great office there. We had, I think it was like 27 nationalities, nearly 100 people. And I discovered a market I had never really thought about getting in actively before then. It was fantastic.
And then what was the journey from that then through to Inari? What was sort of the genesis of the Inari idea? And what was, like, I know when we think about our founding story, there's like this moment of like crystallization where like, okay, this is a thing that must exist, the problem that we'd seen. What was that beginning journey like for you guys?
Yeah, so like a lot of us, it's born from that need or even pain, if you will, right? of not having the things that you want to be able to be successful. So from HCC, I was very fortunate to be a co-founder at A&B. That was a really great journey. So like I joke with people, 5 years prior, I was climbing under people's desks, changing network cables, and 5 years later, co-founding an insurance company, starting up, with $20-30 million, and then raising, I think we raised like 200 or 300 during the process. And it was very, very interesting to not just see obviously I was in charge of doing the technical aspect, but just seeing how to grow that business and how complicated the business is. It sounds easy, insurance, right? There's a promise of protecting someone at some point, but that then gets very, very complicated. And through that journey, the initial idea was to be, and this was 2010, so it's very vintage now, it was to be a digital MGA, right? And so the idea was really having technology at the core, helping our underwriters, our actuaries to trade in a very different way. Life then happens, and then, we got a bunch of cash and went on a war chest, as they call them.
Yeah.
So we went on an acquisition spree because there was a lot of potential there. The cycles of the market works, and when you have investors, they want you to grow, so then you get bought by someone else later on. So we drifted a little bit from that MGA idea, even though ultimately we did end up doing it. We had MGAs in Barcelona, in the United States, and Hong Kong, Italy, etc. We got involved in buying Lloyd's managing agents and the syndicate. So that was a really good vision. I'd worked in Lloyd's before, but not at that level. So that's good and fine. But then you start saying, okay, obviously I have to prioritize technology for the business, right? And in my mind, I wanted to do a series of things, but what was available at that time was very, very different. And so it's still, even today, it still boggles my mind that something as easy as receiving an email from a broker, if you're writing a piece of insurance, to not have that moved on in a very quick way in 2024 is shocking. It was still shocking to me in 2010. So that was very hard to access data, things not talking to each other. Even the very, very basics weren't there. And so we thought about buying, building, and I think on the journey we were on at that point, we didn't have the luxury of time to build. Right, so we needed to buy and do the best we could. But the genesis of the fundamental sort of concepts behind Inari, which is ease of use of platforms, interconnectivity, access to data, and I think they were born there for that pain of not having that stuff.
Yeah, very cool. So you surveyed the market. You were not particularly happy with what was out there, and so you thought, well, we can do a better job. And off we went. And it's sort of what now? How many years later? How many years is that now? 7 years ago?
Oh yeah, I feel very, very much older, even more. So yeah, when we sold the business, I went into semi-retirement and I worked briefly as VP of data science at a fintech startup there. But it was always in the back of my head. I really started working on a prototype of some of the fundamental ideas behind the platform. So I sat down one day, signed up to Amazon, got my coding trousers back on, worked through that and built a prototype. I said, okay, this is good. So technology is working. Work better once we actually get very professional developers to do it and product people and all that sort of stuff. And so the next thing I thought is okay, well, that's good. The technology works, but what does the market think? Right? 'Cause I don't want to build something that no one wants. And so I had a lot of relationship, or still have a lot of relationship with a bunch of MGAs and stuff in the US. I went on a little bit of a 2-week road trip around there, showing the technology, but especially explaining the idea and the possibility of the idea. And that became very clear. So they came back to Barcelona, met up, with my other three co-founders. Because I think it's one of those things when you set up a company, you have to be very cognizant of what you're very good at, and also be very honest with what you're not good at. I'm not good at a lot of things, so you need to have a very strong team around you and share that vision, and that's pretty much the birth of the company.
Yeah, I think that journey around stress testing what you're thinking about and what you're working on against like real use cases, real client feedback and stuff is super, super important, especially in the insurance or reinsurance sphere. Like this idea, you just build something cool, people will want to buy it, does not translate, right? You have to sort of lean in and say, here's kind of how we're thinking about how are you doing this now? Would you buy something like this? How do you evaluate the build versus buy, paradigm or dynamic? Like, putting that in front of people is a super, super important part of the journey, because otherwise you're like, oh, here's a really cool and impactful thing that like doesn't align enough with a pain point, and therefore no clients get it and nothing happens. So doing that early, I think, is a super smart thing that we always encourage, aspiring entrepreneurs to follow that model. So from there, like what was that, you've got the founding team now coming together, you got some interest from clients. What was that sort of V1 product launch process look like? What was that first step into did they want to buy it up front? Did you sort of go away and build it knowing that you could come back to them? What was that transition to like first client look like? Yeah,
so very lucky in that case of we sort of had a first client already lined up. So we'd been speaking about it's people that we know. I mean, as this industry is, right? It's a very social industry, unfortunately. It'd be really sad if it wasn't. It's a very social industry. So we had been speaking with some folks and person I know saying I'm setting up an MGA and this is actually the sort of thing we want to do in the beginning. So we set up the team and started building V1 out of that. There's a couple of, when you're mentioning for entrepreneurs, there's something you've mentioned that's super key, right? It's don't be dogmatic about the things that you think that your product should be doing, and be open. I think you need to be open to be challenged from the market, because obviously it's the people that are going to see the value and consume your product. And there's also a really key thing that we've ingrained into everybody in the company. It's the best idea wins. And so what we're very focused on is when the client hits the button, magic needs to happen, or the most delightful experience you can have in insurance and reinsurance software needs to occur, right? At the same time, you can't be dogmatic about your initial vision. Don't move away from that. Internally, you need to listen to the best voice with the best idea, right? Because when you're trying to build value, what the client's seeing, they're not seeing an individual or who was that person. They're seeing something that works, right?
Yeah.
So that was very key for us. And so so we set up the team at the end of 2017. I was very lucky enough to be able to pick up the phone, phone a bunch of buddies and say, do you want to work 30% harder, 50% less salary? And we'd known each other from other adventures before, and very fortunate for them to join. So very blessed by it's a big jump for people to come on and buy into sort of a dream or a vision, right? So we spent the first year building it. As with anything, you make a bunch of mistakes, and that is absolutely fine. I think there's a lot of stigma around making mistakes. As long as if you make a mistake, you identify it quickly, no surprises, and fix it quickly. That's fine. It's a learning. So we went through that year. We built that first product, and actually we had another client come on board during that year without the product being finished. And so when we opened up the shutters, how do you say it in English, for business in the beginning of 2019, we pretty much had 2 clients on board, which is, I think that's a great achievement for any sort of company in our space. But I think then we play with an additional handicap that we're based in Barcelona, because we all live there. So Barcelona isn't the epicenter of insurtech. When you think about it, you do think about the football, for some reason, Mexican hats, even though Mexico's 10,000 kilometers away, EasyJet, stag do's, beers, and all that sort of stuff. And so building a core system for a highly regulated industry, even though it's only an hour and a half flight away, that was an initial sort of strata of things to deal with, more on the commercial aspect.
Yeah, it must have been interesting with the recent football finals as well. The competing interests of London clients and colleagues in Spain.
Before we dive in too much deeper into the journey, which I'm super interested in, can we give a recap or an overview of what does Inari actually do? I think we do this a bunch with our business. We talk about the journey and things that we're solving for, but we have to sort of circle back and say, actually, refresh. Here's what we saw. Here's the pain points we solve for what the product, delivers. What does Inari actually deliver to your clients?
I think that the primary thing is we give back people time, right? And just from that core concept, there's a load of things that come from it. So there's a high degree of automation in our products, right? So that means the actual sort of operational trading aspect, we make that much more streamlined. It's the augmentation of data. We call that a very different thing. Now it has a name. Now we can call it a name. So that means there's the better served when a piece of so just to backtrack a bit. So one of our products is an underwriting workbench, and then we have a reinsurance product that we're developing, and we'll may or may not be able to talk about that, but very interesting. But it's always around the same things, right? How do we have the machine be the process, not the people being the process? And so sort of rolling back to the experience, you'd see people taking an email, looking at a PDF, checking a box in a system, then forwarding that email. That human being is effectively part of a machine. So let's take people out of that and have people do people jobs. So it's around the process bit, it's around enriching data, it's around being able to service that risk in the most efficient way possible. It's also gaining insights both at a small level or micro level and a macro level. How does that translate into an underwriting dashboard? Then instead of receiving a piece of information or a quote and having to open it and copy and paste and save it here and save it there, it comes in, it gets read, it gets augmented, it gets checked, and so basically you have an underwriter sitting down and they have that piece of risk. Now it's gone through a bunch of stuff and they can actually underwrite, which I think still in 2024 we have underwriters not underwriting the sort of data admin and stuff like that.
Yep.
So that's, and then that same philosophy is taking over to the reinsurance space.
Yeah, nice. You use this term workbench, which is very much in vogue. Every time we go to an InsurTech conference, there's people saying, I'm looking for a workbench, or we've got a workbench. What does workbench mean for you at Inari?
Yeah, because that is a question. I think if you have 6 people in a room, you ask that question, you get 9 opinions. Someone's going to have a duality there. I think that for us, the underwriting workbench, is everything around sort of the servicing of risk on a pre-bind and post-bind basis, taking a bit out what would be claims and things like credit control, all that. So it's how do I manage that risk again on a very individual level and on a very higher level. So if we break that down a bit, it's all around the ingestion of information. How do I triage that data? How do I augment it? How do I make sure that I'm writing things that I should be writing and taking that to that point in time? And then after that, how do I continue to service that? How do I renew it? How do I endorse it? Or may need to cancel it because they're not paying the premium. Another key bit for us on the workbench is not just, that's always the easy bit, it's the happy path, it's the power to say yes. So a piece of risk comes in and it's within your underwriting appetites and you have capacity for it, blah, 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 and you underwrite it. The other thing that we focus on is the capacity to say no and how you say no, right? Are we really interested in that piece of risk? Are we not interested in it today, but maybe want to revisit that tomorrow because that client will always have that need for coverage. So that's the other bit for us that we understand from a workbench. And then adjunct to that is, okay, we've said no, but if we have sufficient data and we've freed up people's time, that gives them the ability to come and review that no. And maybe there's a yes within that no, just not as the way it came in. And for us, that's the very long-winded. This is a workbench.
That last piece is particularly interesting for us because there's so much reinsurance risk that lands on people's desks, but that's not in that immediate appetite or not writing that class now. But because the data is so unstructured and it's sort of gets buried away or just filed away, there's no ability to sort of circle back and go, well, what if we did a bunch of that? What if we looked at these? What if we sort of reverse engineered and tried to price them all? What would they look like in our portfolio? Like if data is coming in and getting structured and presented in a way that gives you the ability to circle back and do that assessment, you can go, maybe we should write that class. Maybe we should start to dabble there. But so oftentimes the current case is, well, we don't do that. And if the point you decide maybe you want to, you have to like jump both feet in and like go for it versus explore it with like real thought earlier. So I think we agree with you entirely, like getting a way to sort of circle back on those no's when you have some more free time. And if you're building software that frees up people's time, like more of that time is available to do interesting, thoughtful work rather than, as you say, like having to do like the administrative tasks that sit adjacent to like the interesting work people want to be doing. So it's a super powerful way to go. Are you doing it then where you're helping clients like customize the workbenches, or do you have like the out of the box version? How does that work? If everyone in that room has a different lens of what that means, how do you approach that with your product?
Yeah, that's the tricky one because you've got two paths there. So the one path is I become very, very bespoke, which there's a lot of advantages for if you're from a customer, because I've been a customer, I think the bit's very good for us. I've been a CTO, sat on the other side and signing contract and stuff, and everybody wants a custom experience because one size doesn't fit all. And you see a lot of benefits to that. Many times that customization will come from capturing data. The actual process of insurance and reinsurance, something comes in, it needs to go through that cycle. May not change too much, but it's around data. Now there's a danger around that you drift off and become too bespoke that then that supplier can't properly apply new features and stuff like that. So our approach is it's sort of like an 80-20 rule, right? So what we focus is all the mechanics that frees up people's time, that's standardized, right? What we do in our products is the actual classes of business or lines of business themselves, where actually that's where usually the customization comes in. That's where we try and build in. So it's sort of like applications within a box, right? So it's not the box telling how the applications or the lines of business how they need to behave. The box does the box stuff, automation, ingestion, AI, whatever it is. Then those particular lines of business have the customization in there, which you can then standardize the customization. Because ultimately, if you're doing property risk and you go around the market, if you analyze 3 people, they'll have 3 sort of slightly different views. But if you go over 100 people, probably those few are still 3, maybe even 2.5. It's one of those things. So that's the approach to sort of accommodate to everybody, and then just being honest and saying, look, the platform doesn't do this. It does all of this, but it doesn't do that. And if that differential of what the customer wants from what you want is that big, then that's not the platform for the customer. It's probably a different platform out there.
And have you found, it's very interesting to hear what you say around adapting to different lines of business. How have you found the market's ability to embrace sort of newer lines of business over the past, decade or so, enabled or hindered by technology? Because there weren't, to pick a really easy one, there weren't cyber systems, or things equipped for some of these very new lines of business that are emerging. If people are doing hot and cold storage for crypto assets or whatever it might be, how has technology been involved in that journey for underwriters to be able to take on less familiar risks?
Yeah, that's a really interesting question. Sort of self-distills itself up a bit higher up, and it's related to another thing we talk about a lot of times. How does these new technologies benefit the insurance process, right? Which is an interesting, because it's very directly related to these new classes of business. So think about it this way: the classic insurance process, which I'm not saying it's bad, it's an appropriate process, was built on the back of AS400s, telephones, faxes, emails, Excel, Outlook, all that sort of stuff. It's not a bad process. It's probably state of the art at its time. Now you have all these new possibilities that technology gives you. So, for instance, in the new classes of business, what does that mean? Yeah, maybe there's a quote stage, or there's a pre-quote stage, there's a buying stage, but do I need to do it in that exact path? And so what these new technologies allow you to do is actually maybe do it a little bit differently. You don't need to do it the way it was built for specific technologies.
Yeah.
So, for instance, crypto, which is a really good example, that's very ripe to not have to manually go out and look for the information that you need to properly assess that risk, because it's all out there.
Yeah.
And this isn't like sometimes if you do D&O, for instance, you want to do something as easy as a company lookup, but you're working in Europe and that's 50 different government sites you need to go to, and you have to. But with these things, they're much more centralized. They're newer technologies. They've been built differently. So I think it's a customer education thing as well, saying, okay, if you're going to try and write crypto storage and insurance the same rate you write financial lines, it's sort of like a box fitting into the triangle now. If we're giving you the ability to do all these sort of things, then maybe you want to do it this way. The outcome is always the same. You're going to be able to bind a piece of risk, service that risk, comply with your obligations, your compliance, your regulation. But the journey to do that is going to be different, and the most appropriate one for that.
Yeah. Absolutely. Yeah, there's certainly this kind of classic question mark around, are we digitizing the sort of existing process, or are we using digital to create an entirely new process, maybe a better one that we couldn't follow before?
Well, I think there's modern technology is making this easier, but that first, the challenge you had with the sort of first push towards modernization was this rigidity that computers often require. And you're right, if I'm doing this with emails and spreadsheets and sort of Word docs and PDFs going back and forth, you're right, the stages can move around, like binding usually at the end, but like you might be getting quotes or authorizations from a couple markets whilst you're still setting terms for other layers with other markets. And it's actually quite amorphous in its actual practice. So when you go to a practitioner, you say, follow this very rigid one step, and then everything moves at a time with a very linear direction. Like a lot of times that began to be something people just got frustrated with, and then would just go, I'll just do it on email, and then I'll backfill this thing. And now we're getting to a point where actually tech's being a lot more, the ability to do things asynchronously, to sync things back up, to, like, we're getting better at making that work, where you're right, it's helping this new wave begin to push an adoption that we've not yet really seen take off. So it's an exciting stage, I think, for the space.
Do you think it has taken off? I'm curious, with an experienced technology leader in the insurance space, you've seen things in your sort of career in various places. How would you characterize the progress we've made as an industry from, sort of going back to 2010s, right through to now? Has there been meaningful change across the industry? Are we still doing things with emails and sort of as you described it earlier on, with quite disappointing kind of approaches, or have you seen real change and some customers maybe stepping up and really changing?
Yeah, it's unfortunately for our clients, they're embracing the change. So we're very lucky. I think it's like little pockets of things. Sometimes really unexpected pieces of innovation. You'll see it in the news. Suddenly an insurer has gone out and it's doing a class of business, but using this technology and this supplier, and it's not the usual sort of 5 or 6 suppliers. It's someone maybe off the radar, and you say, well, well done. for taking that step, because it's a big leap, and they're regulated companies. I think it's not as slow and maybe bad, if that's the term, as it was. But I think it's just taking time. I think part of that as well is if someone comes and says, if there's a new piece of kit, right, and it does all these sort of things and what we were talking about before, and then you sit down and use it, and especially if you're slapping new technology onto an old process, the actual yield that you get, that incremental value is very, very small. So they look at it and said, well, I'm getting 5% performance increase in the time it takes me to underwrite. Am I going to go to the hassle of doing an integration and putting that? And they think maybe not. On the other hand, if that technology was implemented in a slightly different process, so that 5% yield, you get a 25% yield, then it makes sense. So I think there's an education piece, as I said before. It's just moving slow or far. I mean, we get people coming into the company, my company, that have never been in insurance, and then when you talk about the time frames, that's slow. I said, yeah, but sometimes maybe that's the speed it needs to go at.
Yeah.
To have people buying in and coming on board, and I think that's what it is.
Do you have a? This is really interesting to hear you say that, and you've got quite a special perspective, I think, as well, being sat, both partly in London but also in Barcelona. How do you view all the changes or the ambitions of the London market, sort of seen from a little bit further away? Because there's been obviously a ton of noise for a long time about that space, a lot of ambition, maybe too much ambition at times, and there has been lots of progress, but equally there's been lots of challenges along the way. How's it been watching the London market try to evolve as one of the oldest, most long-established institutions, trying to go from heavy binders of paper running around the market to this sort of? I remember Jared and I laugh a few times. It was once described to us as it's going to be like I've forgotten the name of the film now, but
Minority Report.
Yeah, the Minority Report, sort of like screen thing, and everyone's going to have walls that they can just touch and move policies around.
The precogs.
Well, it's funny when people think about like how the industry will work. It's like, here's this massive touchscreen glass wall where I'm moving PDFs around. You're like, oh, I feel we've misapplied technology at some point in this vision. If that's the vision, we have the same PDF that's on your computer monitor, but now on a glass touchscreen. I think we're not directing the solutions in the most impactful way.
But how do you see the London market? I guess from overseas, from a slight distance.
There was a couple of interesting points. I thought, just to start from the point of the screen, and this came up once. I said, well, it could be dragging and dropping. I said, yeah, it's cool, but actually the system should be doing the dragging and dropping, so you shouldn't even be involved in that process. So the pane of glass is super funky and cool. And second bit is that there's a piece of technology or a data approach we have in the platform that I actually describe it as Minority Report in the aspect that you can go to a piece of risk and actually pick up for a specific day everything that happened to that risk, but it doesn't require data warehouses and lakes and rolling back. You just go there and say, show me what that looked like. I always use the minority, because that's what everybody's familiar with, of picking stuff out. Seen from a distance, it's a weird one. Sometimes I think just get on with it. There's too many, maybe, the impression from sometimes from the outside, too much maybe talking and meeting and stuff like that, which I think is important, but then it's just crack on with it. And I think it's like in other industries, you instead of doing something that's very, very big, and what I call Battlestar Galactica projects, big, massive things, massive promises, long development times, break it down into its fundamental parts and be very agile, test it out, and just be very quick on that. And I think it's one of those things, I think it's a mindset thing. Don't be scared of failure. You'll fail all the same if it's a really big project with millions of people on it. It's actually fail fast, I think, is a better approach. So some of these things are just crack on and get it done.
I think the London market, and Lloyd's especially, has this difficulty with all the participants that it's representing. They kind of are trying to do like everything for everybody all at once, and where a company like ours, a company like yours, benefit from being able to solve a couple small things for a couple initial clients, then evolving our product for the next sort of cohort of clients and evolving the product further for the next cohort. and having that natural evolution, be able to say, well, we're not going to do this. We don't do that. So if that's the most important thing, sorry.
Yeah.
Where Lloyd sort of feels like they have to say yes to everything. The scope creep is ridiculous because one small syndicate somewhere was like, well, we have this niche problem. They're like, add it to the list of tasks and the implementation. And they're unable to say no in a lot of ways, which I think saying no is, as a startup, like an immensely powerful, skill to develop, being able to sort of focus on what you need to focus on and turn away things that are a distraction. Some parts of the industry don't have that same benefit, so they're forced to try to do everything all at once, and it's a fail slow model at times.
Quite different running an RFP to eat an elephant whole.
Yeah, exactly. Yeah.
But yeah, no, that's exciting though. But that aside, I guess, because we're respectively, I think, finding lots of good pockets to work with clients who share that impatience, I guess, and want to get moving. How are things looking for Inari over the next couple of years? Have you got any big projects on the horizon or aspirations that you'd like to share with us?
Yeah, I think it's looking good on the underwriting workbench side of things. It's looking really good. It's a busy market, so there's a lot of people doing, a lot of other companies doing some really great work out there and building really good platforms. And it's one of these funny things, with there's other organizations out there that effectively are commercially our competition. I get on very well with them. I wish them everybody the best of luck. And they're all taking, it's really interesting, especially the newer ones. It's looking at that same problem. It's really fascinating to see how it's being solved. I think it's really exciting. That's actually what the market needs. It needs choice. It needs all that sort of stuff, right? So for us, it's exciting because it's a very vibrant, very alive market. There's a lot of really good competition, which also I think, and that's one thing maybe in the industry from a technology perspective, it's lacked. It was always just a few people, and so you don't have that motivation to self-improve on your products. I think that's very healthy. From that product perspective, we're starting to take a look for next year on actually how do people interact with the system, right? As you bring in all this fancy automation, it's really great, automation, aggregation, all that sort of stuff, and you're gaining those insights. I think the next step after that is how do we move away from the traditional way of interacting with the system, move to more maybe an organic way. And I think that's something I always complained about is all the practitioners on the market, when we consume technology outside of insurance, we consume it in one specific way. Then we come to the insurance market and we're forced to consume it in a way that isn't natural to how we do that usually. And one of the remarks I always say, if you look at a policy admin system there wasn't an AS400 green screen, but you look at a policy admin system from the mid-90s and you look at our systems today, we've got a bunch more functionality. It's shiny, it's lovely front ends, but if you look at the actual interaction flow, they're quite similar. So what we're trying to look into is how do we change that flow? And again, going to things like Minority, I mean, let's inspire ourselves a bit on sort of fiction stuff. So that's going to be the big thing for the platform, is starting to change the way we interact, simplifying it. Yeah. And then obviously in the reinsurance space, we're working on I won't call it a project because it isn't a science project, a thing like that. It's releasing next year. And we're very excited about it. I can't talk too much about it.
But you heard it first on the Reinsurance podcast.
On the Reinsurance part. It's an exciting piece of technology that we've been testing with people, and the benefits are there. So
very exciting.
Super cool. Exciting. Yeah, we'll certainly be talking offline a lot more about this because it's a space that obviously we're very close to, and we are very much focused on how do we integrate with partners across the chain of suppliers and things to help deliver the most value to clients. So that's super important to us, and why we continue to have such a close relationship with yourself. Before we depart, as you sort of talk about the new tech and all these things, like ChatGPT, OpenAI, like Hypecycle, where are we at? What do you got? What are you seeing from clients coming to you? What are your thoughts on the hype level of where we are with some of these new technologies?
We're absolutely at the insane summit of the fiery peak of Mount Mordor. That is right at the top. We went to a conference in New York recently, and everybody was talking. In part, it's good. It's good. I think it's part of that. Let's say the more people outside technology become familiar with concepts and technology, I think that's only a good thing, right? It's opening up. I think like with other technologies, it may convert itself into a hammer looking for a nail.
Yeah.
Because I've seen some applications for it where I think, okay, it's not that appropriate tool for it. We've been putting in AI into our Workbench product, but we don't really talk about it too much.
Yeah.
So we prefer, okay, they hit a button, something happens. Oh, that's cool.
Yeah.
And if they ask how it's done, say, oh yeah, we've got a machine learning model or whatever that is. I think it's right at the top of its cycle. It's still ways to go, and it's very interesting how that's going to develop. I think in the case of OpenAI, I think they're nearly about to do, was it GPT 4.5,
Yeah, I think so.
or 5 or something, and we'll look at that, and I'll think what will happen maybe in about a year's time, you don't really talk about it because it's become so normalized.
Yeah.
And so I think people that are making it the sole focus of their, now on a more vendor perspective, people that are making the technology the sole value add, that piece of technology, it's going to become extraordinarily commoditized in maybe a year and a half, 2 years, whatever you want to, because it's already starting to happen. You see that also in the job market. So there's this big push for prompt engineers going up and up and up, and whoop, it's disappeared.
Yeah.
There's all these libraries and things that make it very easy to build.
Yeah, well, and it's central kind of to the way we think about technology more broadly, but people aren't looking for technology. They're looking for solutions, looking for problems to be solved. Like,
Except
technology is a vehicle to help that. Yeah, exactly. And then they're like, I want this toy. You're like, but what for? Why do you want the toy? But I think you're right. It's like people don't care as much about like it being there, being like that buzz is beginning to sort of dip now, but people still want like the pain points to be solved. They want data to be better. They want the speed of interactions to be improved. Like, it can help empower some of those things, but I think you're right. That's an interesting.
The interesting thing about it, it's curious, and then I do some mentorship to startups and stuff, and I talk about it. I said, focus on the value, right? Because when you start, obviously you have the newest technology.
Yeah.
You have the newest technology. You don't have any client traction, and so what you talk about all the time is the technology, right? And it's at that point that you start to, the technology is vital. You start to talk more about the product and the value and the benefit, and I think that's an important transition. I think that's the thing, sort of Gen AI and all these models need to make.
Yeah,
that's a very, very wise summation. Thank you, Frank. It's been wonderful having you on the show again, and we hope
seeing you
this is the last time. We look forward to getting more updates in future. Yeah. But for now, thanks for listening, folks.
Thanks, Frank.
Thank you.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.